Retiring comfortably shouldn't be an accident, but unfortunately, for many people, they don't make the careful decisions and the careful plans to give them a good chance of retiring comfortably. We've identified 6 levers that we think are essential to delivering a comfortable retirement for any member. Those levers really are divided between some that the member needs to pay attention to and others that the trustees or the management committee of the retirement fund need to ensure that they get right. One of those levers is the investment strategy. And the reason why it's so important is that it brings compound interest into the equation. The investment strategy really needs to be focused on the long term and it needs to beat inflation. Inflation is your enemy when you're saving for retirement. And the reason is that over time, inflation erodes the value of your capital. And of course, that's important because you're saving for your future income needs. So the spending power of that income is important. So the investment strategy needs to beat inflation, but it needs to beat inflation by a fair margin. It's not just by a small amount. Probably in the region of inflation plus 5% per annum on average, and that assumes that you're contributing 15% of your salary over a 35 to 40 year period. So inflation plus 5 is quite a challenging target. You need growth assets in your strategy to achieve that kind of return. And growth assets means exposure to the stock market, to property, even including things like private equity, hedge funds, infrastructure. Those are all growth assets. But then you need to balance those growth assets because those are the assets that can be volatile. They can experience big falls in terms of the value. So you need some more conservative assets. Those things are things like cash and bonds. Over time, you want that strategy to deliver the inflation-adjusted return or the inflation plus return without excessive volatility. One of the things that's really important is to focus on the long term. You can't think about 1 year to the next because then the risk becomes quite difficult to manage or to bear. So over time, you want to make sure that you're focused on your end goal, which can be a 30 or 40 year time horizon, and not get too emotional about the short-term swings in your investment returns. So the investment strategy really is one of your important levers.